very best to play it cool right now. He wants you to believe, he wants all of us to believe that he has everything under control, even things that are very much out of control. His behavior kind of reminds me a bit of an arsonist who's pretending there was no fire, when he's the guy who threw the match and lit the actual fire. I mean, his actions caused the market to plummet. His actions have caused people to worry about their retirement savings and how much everything is going to cost. Of course they are. And he's doing everything possible to pretend like none of that is happening, like there is no fire at all. I mean, the guy took a long weekend. Good for him, I guess. Spending time at 2 different resorts he owns in Florida. He appeared at a Saudi-backed live golf tournament, and he played some golf of his own. He even posted a video of himself golfing on social media, as if to make absolutely certain we all knew where he was and what he was doing. There he is. That's the video. Nothing to be concerned about, everyone. I am so relaxed while the market tanks that I am playing golf and hanging with my Saudi buddies. A White House official described the optics of a president hitting the links while the economy was in freefall as, quote, going to a birthday party after a friend has surgery. A little weird, but that is one way to put it, certainly. Then this morning, Donald Trump's message to the American people was telling them not to be weak, not to be stupid. We got this, America. Don't be wussies. And it's not even just him. I mean, his fellow arsonists, whether they knew it or not, had a pretty clear message for the American people this weekend when they were out on Sunday talk shows. Let them eat cake. Here's Treasury Secretary Scott Bessent.
What is your message to Americans who want to retire right now and who've just seen their lifetime savings drop significantly?
Well, Chris, I think that's a false narrative. Americans who want to retire right now, the Americans who have put away for years in their savings account, I think they don't look at the day-to-day fluctuations of what's happening.
No one is looking at the day-to-day fluctuations of their savings account, says uber-rich Treasury Secretary Scott Bessent. And honestly, he sounds a little bit like he was prepped by the same communication staffer, maybe he was, who's been advising his colleague, Commerce Secretary Howard Lutnick.
Let's say Social Security didn't send out their checks this month. My mother-in-law, who's 94, she wouldn't call and complain. She just wouldn't. She thinks something got messed up, and she'll get it next month. A fraudster always makes the loudest noise, screaming, yelling, and complaining.
There really is nothing like a couple of billionaires who are pretty out of touch really speaking to the fears of the American public, is there? But as Donald Trump plays golf and tweets through it and sends out guys like Scott Bessent and Howard Lutnick to pretend like they relate to working people living paycheck to paycheck, it's important for you to know that these guys are kind of on a bit of an island right now. I mean, for one thing, even their fellow billionaires are freaked, for good reason. Bill Ackman, who was a big Trump backer in 2024, lashed out at the Trump administration on Twitter last night. He accused Howard Lutnick of having a conflict of interest and wanting to profit off a tanking economy. He also said that these tariffs are sending us toward a self-induced economic nuclear winter. That from a guy who just a few months ago was saying the business community was giddy with excitement about the Donald Trump administration and that growth was about to explode. That one didn't really age so well, did it, Bill Ackman? Now, as for Larry Fink, who's the CEO of the world's largest money manager, BlackRock, he said today that his fellow CEOs believe we're already in a recession. And Mark Cuban, not exactly a Trump supporter, I know, but he's a legit billionaire and someone who calls it like he sees it. And he said that if the new tariffs stay in place for multiple years and are enforced and inflationary and Doge continues to cut and fire, we will be in a far worse situation than 2008. Worse than 2008 is very, very bad, to state perhaps the very obvious. And even the cable news channel that Donald Trump watches all day long is starting to come to terms with the reality of the situation, it seems.
It is going to have an effect on Main Street. Some things will become higher priced. We will see some products actually be raised in price because companies will pass on the cost of tariffs to consumers. I would expect that. That's why you have some people saying that we could see a recession, we'll see a growth slowdown.
I mean, guys, when you've lost Maria Bartiromo, maybe you've got a bit of a problem. So pressure is building. Of course it is. Now, I'll concede that most Americans don't necessarily relate to everything Bill Ackman says or what Larry Fink says or what Maria Bartiromo thinks. But they might care about what they hear on their local news broadcasts. And what they all are talking about right now in local news broadcasts is the potential impact of these tariffs on small businesses.
The tariff roller coaster is especially challenging for small businesses.
Clothing retailers and local businesses expect to be impacted.
They know that tariffs will eventually impact their bottom line.
They're already feeling the financial pain from these tariffs.
For a specialty store, it's going to be harder for us to get these unique and interesting products because our suppliers just aren't carrying them anymore.
With the amount of product that we import, it would probably cost us $50,000 to $100,000 additional per year. That's not just something that a small business can necessarily just absorb.
This tin, my distributor already did a preemptive price raise of 7%. So I'm concerned about what a 25% tariff will do.
Now a t-shirt that, it used to be maybe $10 to make is now $15, $20 to make.
I've already seen a rise in some of those products in preparation of the tariffs hitting sooner than later.
Adding these tariffs on top of things and making it a little bit more expensive to buy, that's definitely not what we want.
So each and every day this continues, it gets a little more real for everyone. We just heard from a lot of people that it's feeling very real for. Sure, they see the headlines about the stock market falling off a cliff. Those are very concerning. When things start to cost more, when people do check their 401ks, which I think a lot of people do, an already scary situation starts to get much scarier. And when things start to get more real for the American people, things start to get more real for the people they send to Washington. And that's really actually how it's supposed to work. Now, do Republicans in Congress all care about rising costs and retirement accounts of their constituents getting wiped out? It's my sincere hope that many of them do. But what they definitely care about is keeping their jobs. That I know for sure. And that is one of the reasons why a bill in the Senate to curb Donald Trump's power on tariffs now has 7, count them 7, you can see them all on the screen, Republican co-sponsors. Now, this bill would require that new tariffs sunset after 60 days unless Congress passes a joint resolution approving them, which they probably wouldn't do. And 7 Republicans are saying very loudly and clearly that that is a good idea. I should point out that 2 of the Republicans on that list, Tom Tillis and Susan Collins, are the 2 most vulnerable Republicans, or 2 of them, up for re-election in 2026. Again, hopefully they care about what's happening to the people they represent. That's why people send them to Congress. But they definitely care about keeping their jobs. And for Mike Johnson, a little note for you. Republicans in the House also care about keeping their jobs, too. It's not just the Senate. And yet, Mike Johnson was so afraid of pushing back on Trump over tariffs that he literally gave up the power to rein him in. Last month, at the height of the government shutdown fight, Johnson snuck in a vote where House Republicans basically gave away their ability to cancel the Trump tariffs. But now, there are some Republicans in the House who want that power back. Of course they do. And some who at least want a little bit more clarity from the White House on what their actual plan is. During a House Republican conference call yesterday, Republican Congressman Darrell Issa asked if lawmakers could receive a detailed briefing from the White House about Trump's tariffs. As if to say, hey, if you guys are going to tank the economy, can you at least tell us why? What's the plan here? Congressman French Hill, who is also the chairman of the House Financial Relations Committee, said that the Trump administration has been great to work with on a whole host of issues, okay, but he's been frustrated when it comes to how the White House has operated on tariffs. You think? And one Republican in the House, Don Bacon, has said he will introduce a bill in the House that would limit Trump's ability to impose tariffs without the backing of Congress, just like the one in the Senate. So, could this move forward? Could Republicans show a spine and vote with Democrats to stop the tariffs? Some of them are showing a bit of a spine. But I'm not holding my breath because they need many more votes than that. But the point is the pressure is building. And Trump is worried enough that he actually issued a formal veto threat today about a bill, by the way, that is not yet scheduled to be voted on and does not yet have the votes to pass. But he was scared enough about what's happening in Congress right now, about the pushback he's seeing and feeling out there, that he said he'll veto a bill if it ever gets to him. But again, if Mike Johnson has his way, no tariff bill will ever get to Donald Trump's desk. It has to pass the Senate and the House, of course. On that same conference call yesterday, Johnson said Republicans should hold the line and trust Donald Trump's instincts. Don't trust the markets. Don't trust the smartest economic minds in the country who aren't all partisan. Don't trust pissed off constituents, of which there are many. Just trust Donald Trump's instincts. And then today, Mike Johnson basically repeated as much when he was being chased by reporters through the halls of the Capitol today.
I think you've got to give the president the latitude, the runway to do what it is he was elected to do.
Now, what he was elected to do, if I remember correctly here, and forgive me because maybe my memory is a little foggy, I thought Donald Trump was elected to lower the cost of living for everyone, not raise the price of everything, and tank the American economy. But that seems to be what he is intending to do. And while he's on his little island over there with Howard Lutnick and Scott Bessent and Mike Johnson, the cracks are showing and the pressure is building. It's building from the billionaire class even, and from conservative media and Republicans in both chambers of Congress. And it's definitely building among the American people. If those massive protests across the country on Saturday taught us anything, and we're going to talk about those in the show too, is that Americans are paying attention to what is happening in Washington right now and how it is impacting them. They're paying attention to what these guys are doing to our system of government, and to our economy, and to our way of life. And trust me, the American people are taking a note of who's blindly trusting Donald Trump's instincts right now and who is based in reality.
Meantime, let's talk about what's going on with China, because they are now vowing a strong response to President Trump's latest threat to escalate tariffs. According to CNBC's translation, the country's Commerce Ministry calling that a, quote, mistake on top of a mistake. The ministry saying if the U.S. insists on its own way, China will fight to the end. Now, the comments coming after President Trump said he'd hit China with an additional 50% tariff if China doesn't cancel its retaliatory 34% tariffs on American products. Take a look at President Trump in the Oval Office yesterday talking all about it.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. They'll be fair deals.
That's your first. Now, on the subject of the talks, the president said there can be permanent tariffs, and there can also be negotiations. We're going to talk a lot more about all of this, tariffs and everything else, at 7 a.m. Eastern Time with the man in the middle, the Treasury Secretary, Scott Bessent. He's going to join us right here on Squawk Box Live. So lots of questions for him this morning.
You know, yesterday we spoke with Peter Navarro, and his take was that this was not a negotiation. Right. We were going to see that within a matter of hours. You heard that the Treasury Secretary was going to be negotiating with Japan, at least, and we will hear from him where these things stand. But that's been the biggest confusion point on Wall Street: is are these real and permanent? Are they a negotiating tactic? And where do we get there? Depending on the day, depending on which administration official you're speaking to.
I think there's the Navarro camp and the Lutnick camp on one side. I think there's the Bessent and maybe even Elon Musk camp on another, which is say negotiations, and the goal is to try to get the rates down to as low as possible. The camp that I think we all don't know about is exactly which one President Trump is in, because he's talked about this being a negotiation, and then he's also talked about them being permanent forever.
I was going to actually talk about this, but I see it's in the, we actually have it's scripted, but then we'll talk after. But speaking of Scott Bessent, the Treasury Secretary, Politico is reporting that he flew down to Florida over the weekend to encourage President Trump to hone his message on negotiating trade deals, or else he would risk a further fall in the financial markets. And the operative term there is negotiations. Elon Musk also reportedly reached out to President Trump. Washington Post says Musk made direct appeals to the president to reverse course on his widespread new tariffs, but proved unsuccessful. In another development, Senate Majority Leader John Thune told reporters he doesn't see a future for a bipartisan bill introduced last week that would limit presidential power to impose tariffs. Senator Rand Paul has some very pointed remarks. He's going to be on later today, and we can talk to him after we talk to Scott Bessent, and we'll see whether he is very forthcoming about what he told the president in Florida, or, you know, with President Trump, it's best to, if you're going to, I'm not saying disagree with him, but if you're going to point out to him there are some nuances for what he's doing, it's best to do it in a fairly conciliatory way. So, but we'll see. I think he went down and said, listen, Mr. President, no one wants a permanent tariff structure in the United States. And the whole reason you're doing this, and really I think the reason that they settled on that weird reverse engineered formula, which makes everything look worse, so they could, their opening bid could be much higher than it would have normally been thought to have been, and it leaves room for negotiation. That's what everybody...
An anchoring technique is what he likes to call it.
An anchoring technique. But, you know, listening again, Navarro has made the rounds everywhere yesterday, and he was basically saying, we don't care if it's 0-0, that there's so many other impediments to free trade in all these places. So I don't know what the end, I don't know what the, if the end game is zero trade deficits with every country in the world, that's never going to happen, because it doesn't work that way. But I don't, you know, that's
there are implications about what that means. The trade deficit that we run with countries, they often reinvest in the United States through that, whether it's buying treasuries or sending investments here from some other perspective too.
And you saw Larry Lindsay yesterday. The whole idea of comparative advantage, it's a real thing, and it's what, you know, it's globalization. It has had some unintended horrible consequences, admittedly. But we're never going to make certain things here. Even if you got zero tariffs, how are we going to pay workers here $2 an hour? There's going to be places in the world where things are going to be made that we import.
And Navarro's point yesterday was they should get rid of things like the VAT, the value-added tax. But, you know, that's a tax that doesn't put us at a comparative disadvantage, because everyone there pays it as well. It's basically a consumption tax.
And it's different.
It's like sales tax.
Different in every place. So you could spend how long talking to the EU about what they do? You spend 6 months doing that. You could spend the same amount of time, you know, talking to the UK. Right. You could spend the same amount of time talking to India.
Good morning, Eddie. We actually just got into the market on the short side. Gold opening range trade. Opening range in gold, we were looking at the 1 minute. High was 30.29.30, low at 30.25.20. House count is currently short, 30.24.90. A little bit of slippage on our entry there, a couple ticks of slippage, but house count is short to open the day. Short one gold contract, 30.24.90. We're going to put our CYA in right now. 50 ticks of risk on this trade. Another wide opening range in gold. Hogue, Coach J, 40, 50 ticks opening ranges in gold last couple days.
Order fill. Yeah.
Actually, Friday we had like a 70 tick opening range, didn't we? 65 tick opening range in gold.
Yes.
So opening range is getting wider and wider, but so we're only trading one lot just because of the expanded risk on these. But we are short. What do you think of the short right now, guys? Any opinions on it? And good morning to everybody. Good morning.
Good morning to you too, JD.
Hit the ground running.
Coming out swinging is the way we do it now.
I think the overnight trend was to the upside. We've got long overnight inventory. We've rejected the initial balance from yesterday. I don't hate it, but the trend from the overnight is to the upside. So,
yep,
seems like a see money take money type of a situation. We got the volume point of control from yesterday, 30-20. There were some size orders like 30-18. There was some size traded. 30-15. There was some size traded. So there was some trying to figure out if it was buys, sells. I mean, the delta is pretty much flat on all of those bigger numbers. Looks like possibly some growler orders there, so it's very difficult to understand which side. Yesterday, we had a trend day to the downside, and we added 8,000 in open interest. That's the first add in open interest in about 3 days now. It's just been mostly long liquidation. Now we're starting to see yesterday some new shorts coming into this market, and if those shorts aren't comfortable being short, that could be that could be good to the upside. But overnight inventory is working for us right now, JD. So
yep.
See what happens here.
Tilt's pretty flat. We got 50-50 in the tilt right now, so no help on a signal from there. Coach Jay, what are you thinking in gold right now?
I like this short. Overnight VWAP is at 30.18, so I would start thinking position management around there. I know we're only in a one lot, so I would think, if I was in multiples, probably taking one off at that overnight VWAP. But I think what we can do is, if you want to see if this has the potential to sell through that VWAP, just trail your stop once we get around that 30.18 area. And that's kind of where Hogue was talking about all those orders getting filled. So I think start thinking position management near that
order
VWAP.
Filled.
Looks good so far, though.
Sounds good.
We got
so far so good. Yeah, we're just about 1-to-1 R on this. So
volume point of control right now. We just got that within a tick or two. Kind of liking the momentum, the speed down.
I like this because it closed outside the 9.
Real thin. Dome is real thin. I haven't seen.
It is very thin.
What is
not even trading every price, PD.
Yeah.
Yeah, this is the 8.
We're about to hit that 18.
I'd pull your stop now to 21.5 maybe, so we can take something. Because if it bounces off of VWAP, it could be a pretty strong bounce, and go right back up. What do you guys think? I know you already
moved the stop. Yeah.
Okay.
As Hogue alluded to, see money, take money, possibly see money, take money type of trade in gold this morning. So yeah, we did adjust our stop. We're a 35 tick profit. But we're still sitting at 1-to-1 R right now. So we'll let this one play out a little more. No 7:30 numbers this morning. But Eddie, what do we have? Oh, we just got tagged on our stop. I was counting up 337. Little slippage on our stop there. A couple ticks of slippage getting out. I was counting up 337.
Not bad for 5 minutes of work.
We'll take
Not bad at all.
Wait a minute.
I hear that, Jay.
Sold. Let's play.
Well, JD, you know what? Coming up in around 7:55, we got that red book coming out here. Also, there's going to be a lot of speakers here today. Not necessarily from the Fed, but from around the world here. That's on the list here. We do have a 12 o'clock White House press briefing. 12 o'clock, also 3-year note auction. 1 o'clock, Daly's going to be speaking. 2 o'clock, Trump signed some more executive orders on energy. And we got our API a little later on in the afternoon. But otherwise, well, we've got we're on our own today, JD.
That's fine. That's the way we like it, right, Eddie? Let me Headline risk on, as per usual, these last few
Order
weeks.
filled.
Make sure you have one eye on the news, one eye on your charts, one eye on the market. You never know when a rogue headline is going to slip past the net. And
oh my goodness! Just like yesterday. just like yesterday. And it's good to see that gold recovered. We got that 1% back, above 3,000, but we'll see how we can play from there.
We might be seeing just a little shift, a little flight to quality. We saw the largest one-day swing in Dow Jones history yesterday. Almost 2,600 point swing from low to high. And then we see positive open interest with the down move in gold. So possibly a little, like I said, maybe a little flight to quality there. We will be taking a look at the crude oil opening range trade at the top of the hour, 8 o'clock a.m. Central Time. And some more follow through to the downside.
Absolutely huge range in the Dow yesterday.
Huge. Largest single intraday range ever. Largest in history. We were there for
I think I remember when it was trading 2,000. That would have been entire. That would have gone to zero.
The largest ever.
Yeah, high to low move was about 7%, and if we remember how it happened, right, that 7% happened in about 30 minutes.
Yep,
which is pretty crazy to think about.
How many Dow traders we got in the chat? How was your day yesterday trading the Dow? If you were in there, we don't need a poll. Just sound off in the chat. How'd it go? We had our eyes on the Dow. We didn't place any Dow trades though.
Speaking of chat, Chubb's the first one in there winning the prize this morning. And then Anastasio, Gideon, Dan Trader is always in the morning. Good morning, everybody. Tim C, Yabbersmack, Matthew, Raj, Adrian, Billy Joe, the Stick Man, Hi Trader. Good to see everybody. Glad you're here.
Good morning, everybody. Looks like our gold exit has been validated.
See money, take money.
See money, take money. Good call on that stop, Coach Jay. Thank you. Saved us a little dough. Or put a little dough in our pockets, I should say. Nice little cushion for the house account going into the crude oil open. Seeing some decent buying coming in gold right now.
Right off of that overnight view up, are we going
right
to continue to see the trend to new all-time highs, right? Gold sold off a couple of days. We got to pull back to the 50 moving average on the daily. And this is where we've seen it bounce before, right? That kind of dynamic support, that 50 moving average in a trending market. Right now it's at 29.93. Was the low of the session so far. And this could be the next leg up.
Increase in open interest, we may have trapped some shorts down there.
Interesting. Yeah, we had a pretty heavy volume to the downside on the last 3 days. I know we were talking about, selling gold to maybe cover some margin calls and things like that. But if the equities are found a bottom, maybe gold did on this move as well and can continue back up.
Yeah, those 3 down bars there in an uptrend. Keep that in mind. And we lost about 25,000 in open interest on those 3 days. That's long liquidation, my friends. Long liquidation. If you're selling, if you are getting out of a position and that position is long, you have to sell. And that takes that selling power away from the market. Now we've seen some new selling coming into the gold. Couldn't quite get to the weekly kickoff level of 29.53 yesterday. And perhaps we've trapped some of those new shorts down in the hole there. So overnight inventory is long. That's working in their favor. Just a good see money, take money trade this morning.
Excellent. That's how we like to start a day. Nice little cushion to build some confidence. All right. Again, we're going to take a look at that crude oil trade at the top of the hour. Eddie, you got a couple news stories for us? What happened overnight?
Couple. Well, U.S. stock futures pointed higher. It's after a bout of heavy volatility in the prior session as we know it. Uncertainty lingered around the future trajectory of Trump's tariff agenda. We did see the Dow gain 790 points, or 2.1%. S&P increased by 93, and the Nasdaq 302 on the day there. So have that. Also, Monday, a report eventually deemed to be false, fake news. The Trump administration was considering a reprieve from the tariffs. The White House later doubled down on the policy. although stocks were largely able to weather the swift flow of news and rumors. Blue chip Dow benchmark 500 finished modestly lower following the roller coaster trading activity. We did see the Nasdaq edge up by 0.1%, and the tariff-fueled swings in stocks led to a surge in the VIX, widely known as Wall Street's fear gauge. Levels not to be seen since the COVID-19 pandemic sparked the sell-off in March 2020. Also today, U.S. Representative Greer is due to tell Senate Finance Committee that there has been an approach by almost 50 countries asking to discuss Trump's sweeping tariffs, according to media reports. Now, in a written testimony, several of these countries, like Argentina, Vietnam, Israel, have suggested they bring down their tariffs.
Order filled.
Non-tariff barriers. This is a report from Reuters. And boy, yesterday, I tell you, if you were stuck around for the market on close yesterday, boy, we had a good time with that one. That was just circus rodeo. And hopefully we have a little controlling markets today. But otherwise, that's all I've got right now here. I'm going to pass this back to JD.
Thank you, Eddie. Yeah, those MOC numbers yesterday on the close were they were fluctuating.
Giddy
They were
up.
up, they were down. A couple billion to sell, flip to buy, flip to sell, flip to buy. Equities ended up railing on the close too.
I could not keep up.
You did a good job though, Eddie.
Thank you.
It's all.
Thank you, man. Cheers.
All right, seeing a little more strength in gold right now. We are out of that trade though. Coach Jay, what do you say we get into some charts before the crude oil open? How's it looking today? What are the oracles saying?
If you want to go on my chart, Order here, starting filled with the weekly. It looks like all right. There we go. So we did test down to that 200 session moving average. Jay was pointing out we tested down to it. We've got, and there, again, this is the weekly chart. The week isn't over, but it does appear to be creating a degree of excess below the weekly kickoff low, 49.88. When we see an auction die, quite often it dies in excess. We can see this weekly downside auction with deep excess on the low on the weekly chart. So what are we looking at here? We've seen that rejection below that 200 session moving average on that weekly chart is, I think, probably one of the biggest factors that we're seeing so far this week. It is only Tuesday. Wow. All right. So here's the daily. And Jay, if there's anything you want to, chime in on any of this, please just let me know.
Sure.
So we didn't quite get to 25% off the all-time high in the S&Ps. On the daily chart, we have that degree of excess. The market looked lower, tested to the 5% below the 5% threshold yesterday, and then we found buyers, and very big ranges, very big initial balances in both of these markets, in the S&P and in the Nasdaq. We're showing a degree of excess below this 20% off the all-time high. We're back above last week's low. The news, it's mostly news driven, of course, where everybody's worried about the tariffs. Seems like a lot of countries are coming to bargain. They're coming to do the deal, which is a good thing. As much uncertainty as we can take out of these markets, the better off we're going to be. So the daily looking, like we're heading to the upside. Take a look at the 30. Jay, we have overnight inventory to the long side. Look at the huge initial balance in the S&Ps yesterday. I mean, just gigantic.
That 30-minute candle, where that huge wick at the top, right, where we saw the markets, all of the markets really turn around. That was that initial balance.
Just gigantic.
Yep.
All right, overnight inventory. What do we have? Here's the open. Last night, we are here. We are holding overnight inventory to the long side, possibly rejecting value from yesterday. On this platform, I'm seeing value high at around 51.34 value high. So overnight inventory is long. We did reject below. We have excess on the low. We also have excess on the high yesterday. We do have some weaker structure above this market, which could be targeted if this thing does turn around. We've got the gap from a couple of days ago. That gap is 53.13 up to 54.28. We've got the spike base from back here on the 3rd of April, 54.44 and a quarter. There's an afternoon pullback high, 55.24 half that I'll be looking at. And then, yes, yet another gap up to this range up here, which takes us basically up to weekly kickoff high. If we're gonna keep pushing higher, those are visual targets, and that spike base, that afternoon pullback high, while they seem obscure as far as levels are concerned, if we head that way, watch price action in and around them. There's usually going to be some sort of reaction or some sort of opportunity there, at the very least, to limit risk. And what we talk about here in the opening call is limiting risk. We're always talking about context. Well, we saw a little bit of a possible excess low here. What do we see as far as open interest is concerned? Value overlapping to lower yesterday, and with an increase of 69,000 contracts in open interest. How much open interest is that over the last couple sessions? So that's 140,000, including the day before, and 39, almost 200,000 contracts in open interest on this push to the downside. Starting here, and here, adding 200,000 in open interest. That is a lot of open interest. That is a lot of new selling, new shorts coming into this market. If those shorts start to get wind that we're going to be making some deals here, all those shorts are going to have to bail. And did they start to bail yesterday? Jay, what are your thoughts?
Yeah, I think so, Hogue. I think we saw yesterday, any kind of sign of good news. It was, hey, let's get out of here. And maybe it's not new buying, but if I'm short this entire time, the thesis for that short has to include that bad news, right? So once that bad news is out of the door, or we start to get some good news, everybody rushes to try to get out of those positions. And then at that point, there are no passive sellers, right? And that's why we get that 10% swing in the Nasdaq that we saw, or in the S&Ps as well. What I'm looking at here, Hogue, we talked about that initial balance. I'm looking at a couple of different levels here, and I'll go down to a 3-minute chart really quick. This is the highest volume. After that push up, the highest volume that we had on a 3-minute chart was kind of in this zone, 51.46 up to 52.85. Pretty big zone.
Order filled.
And so far in the overnight session, we've accepted price back inside of that, right? The lower end of it started to act as a support. So the target from there would be the 50% of it. If this 50% acts as a support now, which is around 52.15, I'm giving it, down to that 5200 area, then I'm looking for the rotation back up to 52.85. Why is that 52.85 significant? Last Friday, where we had China increasing tariffs on the U.S., right? China's response, that's this zone here, right? So that started Friday's sell-off, 52.85 at the low, 5400s at the high. And if we go out to a 30-minute candle, we can see that this 5 a.m. Friday morning, 5 a.m. Central Friday morning, that was that retaliation there, right? And that started our sell-off. We haven't traded back through this imbalance since it happened. So a couple areas, right? 52.15, 5200 to 52.15 needs to hold. If that holds, we trade back up to 52.85. And then, the question is, do we accept back inside this range? We can see yesterday's spike, as crazy as that was, exactly where it stopped, right? The low of that retaliation headline from China, right? To the tick, right? The market goes up almost 9% from the low and stops to the tick at that area. Whoever sold there is continuing to sell there. And if they don't step out of the way, then it's going to be hard to get through that level.
Crazy. How many people do you think were watching that level to look for an opportunity for a sell up there?
66.
It's a great question. I wish I was. I wish I was one of them. Because to the tick, I don't know if it's intentional, whatever it is, or maybe they were short and they covered all of their position back up to where they were short, so we don't have convinced buyers. And that's the thing, Hogue, right? Where we see it, I think it's safe to say that a lot of that move that we saw yesterday was short covering. short covering doesn't mean new buying, right? So could that just be the area where they had to cover that short and we continue lower now? Last thing we'll take a look at is this 200 moving average on the 30-minute chart. And I got to give a shout out to my guy, Coach Paul. Anytime we're under this 200 moving average on the 30-minute, he's looking to sell. That's up at 53.18 right now. So if I do get long in this market, we got some targets to the upside, 52.85 and then 53.18.
Yeah.
Awesome.
So
Hey,
it's right here. Coming.
you're the one that coined the phrase, that price meant something to somebody.
Yes, it did. Yes, it did. Yeah, 52.85.
You also quoted somebody that I think I know who might have said this. When there's no bad news, equities just continue to grind higher. So we're going to need more bad news to push this market lower, don't you think?
Agreed. I agree, Hogue. Yeah, we've been seeing selling the entire time. That selling has been, expedited by bad news. But if that bad news is gone, then we can see these markets start to rally. Shorts have to cover, new buying coming in, and they're waiting, right? It was a false headline, and we can see what their market's reaction was. So there's money waiting to buy this. They just need the go ahead to do so.
I can see all those hands on those mice, just waiting, waiting to buy, just waiting to buy. And with the, I mean, that's a 10% increase in open interest over 3 days to the short side. A lot of shorts, a lot of new shorts, All right, let's take a look at the Nasdaq now. I mean, it's almost the same thing we're looking at here, isn't it?
Almost, pretty much the same story here in the Nasdaq.
I mean, here's the weekly. There's the 200 session on the weekly, again, showing signs of rejection down there.
Yeah, there it is.
This was 1 day. This was a 1 day bar, 1 day weekly bar. Just absolutely huge.
Crap, man.
Absolutely huge. But again, showing signs of excess below that 25% off the all-time high, rejecting the 200 session moving average onto the daily. Again, excess low yesterday. What is excess? Excess is when price auctions too far in one direction, in this case to the downside. Sellers back off and buyers take over. This could indicate the cessation of the downside auction, at least for now, and a new auction to the upside, which seems to be continuing as we speak. Let me take these off of here. All moving averages there. That clears things up a little bit. Added 5,100 in open interest yesterday. The day before, added 13,000. The day before that, added 20,000, 13,000. What was this? 20,000, 13,000, adding yesterday another 8,000 on overlapping the lower range, overlapping the lower value indicates more selling coming in. Even though this was a green bar, it's overlapping the lower, indicating, that the sellers were stronger, and we did add open interest. So again, we've got a whole bunch of open interest telling us that there's a whole lot of new shorts in this market. If those new shorts start to get hurt, what do they have to do, Jay? They have to buy.
Gotta buy it.
They have to buy. So again, these markets are like a sore toe. And if you've ever had a sore toe, you can be damn sure you're going to bang it on something. So it all really just depends on how these deals go, what's going on with the tariffs. We do have some economic information later on in the week. We've got CPI and PPI Thursday and Friday, respectively. Those could be some big numbers. Other than that, I mean, we do have we have FOMC meeting minutes tomorrow.
Minutes tomorrow.
1 p.m. Central. So if that does anything, I don't know. I think this market is so focused on these tariffs, and I don't think it really cares about anything else right now, except for, of course, inflation. And that could be CPI and PPI. So I don't know. We'll have to see. Anything standing out to you on this daily chart other than the S&P and the Nasdaq, both with the death cross?
On the daily, not so much. I think you kind of went over it there, Hogue. Similar levels that I'm looking at on the shorter time frame. If we go down to a 30-minute, again, we have that China tariff retaliation candle. 50% of that, almost to the tick, was our high of the day yesterday. I'm asking myself why this was not part of my analysis yesterday, but it is what it is. The low of that candle is 1893, and that 50% level is 18334. We'll zoom in a little bit more. The highest volume candle that we had yesterday on a 3-minute was at the high of the day. We saw that rejection, really quick sell-off, 17,768, and 50% of that is 1851. We can see where we rejected on this rally, right? We had, Hogue said overnight inventory to the long side, right there to that 50%. So if we can't close above that, right? The S&Ps did, right? The S&Ps held above this, using it as a support at 18,000 level. If we can't find buyers up here, and again, this short covering move is buyers or are buyers that needed to buy, right? They had to get out of that position. Do we have convinced enough buyers to hold positions up at these prices where we've seen rejection before? So right now I'm thinking about a short in the Nasdaq, honestly, back down to the low of this range, just because we're not finding the buyers up above 18K right now.
That would take us pretty much right back to VWAP, that wouldn't it?
It would.
17,835. Yeah. Overnight inventory is long.
I was going to ask you about that, Hogue. We have overnight inventory long, and they're positive almost 2.5% right now in the Nasdaq. Do you look at that going into the open at all? Like how big that percentage is? And if they need to reconcile at all?
Yeah, I mean, I pretty much just eyeball, where we opened last night was down here around 17,670, 674 approximately. And where we are now, we've moved price higher, so you can kind of assume that shorter time frame, weaker hands buyers, either covering some shorts or looking at getting into the long side. So, if you're looking for some sort of way to quantify overnight inventory, yeah, you could look at the percentage from settlement. Dalton looks at settlement, so he would say yes, definitely for sure we have overnight inventory to the long side. Settlement to me, I look at the open last night, the opening price from last night to look at overnight inventory. I mean, overnight didn't start till last night, right? So neither of them is wrong. It's just doing things with consistency that might help. So I like your idea for a short down to that level, back down to VWAP. Problem is, where's the risk now?
I was just going to say that. Yeah, if I could have sold it at 18K, which we could have a couple minutes ago, that would have been a much better trade, right? With a couple micros risking that high. But I do think there's about at least 100 points down to VWAP in this Nasdaq trade. And maybe the trade would be look at the S&Ps, which were holding up a little bit better at that 50% level that we were talking about. And maybe the S&P playing catch up to the Nasdaq would be the trade down to VWAP.
Ketchup.
No ketchup on your hot dogs, right?
No ketchup on my hot dogs.
You guys just knock it off and muster up a trade.
Eddie. All right. Well, let's take a look at crude.
Hey, real quick here, another 5 minutes, 5-minute warning on our Red Book. That's what we got.
Red Book.
Get that out there.
It's a survey of like 6,000 retailers. See how retail is doing. It might actually be somewhat impactful if there's any focus on inflation. I don't know. We'll keep an eye on that one. Thank you, Eddie. Weekly in crude oil. We're right in the middle of yesterday's large range. This is the weekly bar, showing a little bit of sign of indecision down here on the weekly. It's just basically showing the break from balance we had last week and an attempted continuation. My question is always, Jay, what direction is it attempting to go and how good of a job is it doing getting there? Here's the daily. Here's the break. Here's the attempted continuation yesterday. And again, we have another doji-like bar. Indecision. Market is indecisive here. It is waiting for new information. It has left one area of balance and is now creating another area of balance in short time frame here. we added 39,000 contracts in open interest just yesterday. Now, that's an estimate. We added 54,000 the day before in open interest. We added 12,000 the day before. So we're adding open interest on a down move indicates short selling. Those short sellers don't see what they're looking for. There could be a rip to the upside. Could it happen? Will it happen? Did it happen yesterday? Who knows? But we got an inside extended trading hour range right now. Anything stick out to you on this daily, Jay?
On the daily, the one thing that sticks out, Hogue, is that volume from yesterday, right? We had it's the highest volume candle that we had all year on the daily so far.
Yeah.
And it was a indecisive candle, right? So, like you said, we came down to a price with, first time we're trading under $60 in a couple of years here. And you have to think that there are going to be some buyers that step in there, whether they're covering their shorts or they're the landman and they want to keep crude oil above these prices. A lot of indecision. If I'm looking at crude right now for a trade for today, because of that price action that we had yesterday, it needs to break out of this balance range. If we look at the 30-minute open from last night and we attach a view up to it, it's a flat line, right? So this market so far has not decided anything. And we've seen sometimes in Europe that crude chooses the direction for the day, but it hasn't, right? It tried to sell off, got down near that $60 level and bounced right back up. Right now, I would be patient in crude, just waiting kind of to see whether or not we get a response to anything. Headline markets right now could get this thing moving. We saw it yesterday with that, $3 spike. But right now in crude, it's imbalanced, and I don't see too much opportunity.
I'm with you. I mean, we're opening, in essence, right in the middle of value from yesterday. That big jump in open interest, 39,000. Could you pick a direction, which direction that open interest came in on this? There's excess at the low, there's excess at the high. Value is lower. I'm viewing that as additional new sellers coming into this market, but I'm with you, Jamie. We're right in the middle of the value area, right in the middle of the range, relatively close to the center of the initial balance. I don't think we have too much as far as overnight inventory. Here's our overnight inventory, approximately 6103. We're trading right there. Eddie, what you got?
Red Book, they were looking at a 4.8, coming out at 7.2, and that's definitely positive for the U.S. dollar. Big move to the upside on Red Book, 7.2%. Back to you, Johnny.
Thank you. All right. Do we see some action here off of Red Book? Let's see.
Looking at gold here.
That's a big jump.
Let's look at the gold.
All right, let's take a look at gold. Getting a little pop here. Well, maybe not. Here, hang on. This is the weekly. This is the daily, actually. Weekly. We kind of pointed this out yesterday. The areas of balance are getting closer and closer together. Right now, the momentum is certainly slowed to the upside. I don't think we've broken market state to the upside in the longer time frame here just yet. Daily. All right, 3 down days and an uptrend. 3 down days and an uptrend. We added 8,000 in open interest. Yesterday, we lost 19,000. So these first 2 red days were long liquidation, as would be expected. We just came off all-time highs. First thing you're going to do is you're going to take some profit off if we start seeing this market turn the other direction. Yesterday, we added open interest. Maybe we've started to trap some shorts down there. What do you think, Jay?
I think so. I think so as well, Hogue. This overnight VWAP in gold is holding up pretty nicely. This might be an opportunity for some longs here.
Well, here's that 30-minute chart. We got it on yours right now. Talk about your levels there.
Okay, so we have this overnight VWAP, which is 3018. We can see we're trying to sell below it, not seeing convinced sellers below that as well. This market has been in an uptrend. Like we said, we had a couple pullback days on higher volume.
By the
And
anchor
risk
VWAP,
here would be
which is the
about
white one,
10
and
points,
then the,
just below this kind of swing
the
here.
red there.
I'm trying to think whether or not there's another spot to put that risk. It gets kind of expensive if you're looking at, that 3,000 level to hold.
Yeah.
Maybe better trade
Where
location a
you're-
little bit later. Go ahead, Hogue.
I'm with you on that. I'm just looking at, where you were looking at, your stop. I was looking at that to get in.
yeah. That might be the better spot to get in there. Yep.
Because
Get
we
a
do
quick
have,
little
there's
flush.
some pretty considerable overnight inventory to the long side here.
Right.
Still. And we're in range, we're in value. I think better trade locations are going to happen as the day goes on.
Agreed.
But if we can't hold that VWAP, that's where all those stops are going to be, Jay. Right around 3,008.
Yeah. Let's not be one of those. Let them get stopped out first, and and then we'll take it from there.
Yep, we'll take those stops.
Yep.
I like the evil laugh when I think I've got something.
Are we going to look at the crude opening range trade? I know we're in balance, but we may get some volume to push us out of this balance on that open.
Let's see the size of it. JD, what do you think?
This will be a nice long because you have
I
defined
got the 1 minute.
risk
I
right
got the 1
here
minute
at
chart up in crude oil right now.
163 if you were
Waiting
to go
for
long right now.
the bell. Top of the hour, 8 o'clock Central Time is official regular trading hours open for crude oil.
Crude oil, 71% long.
There you go.
Why?
I'm trying to figure out what they're saying too, but
Well, 58% in the money there, and average price
that's good.
$61 even.
30 seconds to the opening bell in crude.
Seems excessive for the flatness that it's been in all night.
Right.
20.
Wait a minute.
Wow. What's it all mean then?
If we don't play safe, it doesn't.
Like that, man.
Very sideways price action in the last hour.
maybe they're looking for a move back up to that spike from yesterday, right? That 62.40 area.
That's about half that, isn't it, Jay?
Half that is 63.13.
Crude is open for business. Crude is open.
Hey, can I help you?
Unlock the door. Let them in.
Well, Brent and WTI both took a tumble 14% since April 2nd's announcement of these tariffs on all these imports. It's a big drop.
Yeah, this will be another one of those markets that'll be probably drastically affected if something changes with these tariffs. Right now, there's little hope in these markets that it's going to get resolved. 11 tick opening range so far, JD.
Yep, I'm looking for a 2-lot right now.
JD, loaded for bear.
Loaded for bear. All right. Working our stop to get short. And working our stop entry to get long. Working 2 lots on either side of the opening range in crude oil. Actually. There we go.
Eddie just posting some interesting information, especially here during the opening of crude oil. Senior White House official order directs agencies to prioritize coal leasing on federal lands. Energy friendly, ladies and gentlemen. Energy friendly.
There you have it. No entry, no trigger entry in crude oil yet. We're right in the middle of the opening range again. Seems to be a theme, right?
JD. If it's typical, we could be in here for 15 minutes before we get a fill on anything.
Yeah, seriously.
We are on the lower end of the range right now.
Would you consider this a bigger opening range for crude, a smaller opening range? We got about what 12 ticks here.
12 ticks. It's on the tighter end. That's why we're trading a 2-lot for it or on it.
Okay.
Anything wider than 25 ticks, stick with a 1-lot, just to mitigate
Gotcha.
risk a little better.
So yesterday's was a 12-tick opening range as well.
All right, we are short one crude oil, 61.03. We have been stopped into the market.
Buenos días.
Before that.
Sí, dígame.
Day before that, 73. 25.
Sí, con él habla.
Before that. So it's on the smaller end.
Smaller end, yeah.
Muy bien.
We're taking 15 ticks of heat. Should we, because that opening range is so tight, should we expand our risk a little bit? What looks like a good CYA on the upside? Above 22? Right now we're sitting at 18. Is that too tight?
Yeah. You gotta give it a few ticks just so that they can take out the stops that are probably up there, like ours.
Yep, like ours.
Muy bien.
61.27.
27. All right, that works for me.
All right. Coach J has set the price.
Coach J has set the price. All right, we're taking 24 ticks of heat on this opening range trade in crude oil. Short a pair, 61.03. House account. What was the hum for? What are we humming to?
Just thinking. I got 1923 stuck in my head. That last episode on Sunday was wild.
I didn't catch it.
Watching it, huh?
It's funny because, 1923. Well, I have a picture of my grandpa. It was probably like 1920, and he was a mechanic working on like the old Fords. 1920s. He's got like an engine block in front of him. And I'm thinking, this movie is like 100 years old. It's about times back.
I mentioned that it was a good entry long because the risk was
probably just out of high school
here.
or just in high school. He was a Ford mechanic in 1920. I still have the picture.
Still a good entry.
It's just
Let me
amazing. It's
see
just
if I can get it right here.
You've got
235.
all this time and all these generations between then and now. And watching that on TV and seeing those cars and thinking about, okay, well, my grandparents were alive then. I mean, they were in their 20s. Crazy.
That's pretty crazy.
One there and one right here. Let's see
What do you watch 1923 on, Hogue? That's like the sequel to Yellowstone, right?
Yeah.
Wow.
Yeah.
Okay.
18 something.
Wow.
And then 1923 and then Yellowstone, and it's all the same family, and it's their story about where they came from.
There's a
how they
couple
got to
spin-off
Montana
shows on
and
it.
all that.
Gotcha.
And it's on Paramount.
Do you like
Paramount?
Do you like
Plus,
19? Do you like 1923 better than Yellowstone? Did you find Yellowstone to be a little too fantastical at times? A little too out there?
Yeah. Yeah, I mean, I don't know. I like them all.
Yeah, true.
1887 or whatever that one was. I mean, how hard was life back then? And even in 1923, life was freaking hard back then. Here we go. All right. Just hit the stops.
Not liking us too much.
Just hit the stops.
Just ran through them. Made a high at 24. That's where I initially moved the stop to. Moved it up to 27 on Coach. Oh, and we're out.
Got
There
us.
it is. All
They
right.
got us.
They got us. All right. House count down $150. One winner, one loser on opening range trades this morning. Man, it didn't even give us a tick. We weren't in the money for even a tick on the downside there.
No. Did we slip that one tick?
No slippage on the entry. but it didn't even give us one tick in the money on that trade.
Nothing.
It just did an about face. Then an about face took
stingy.
Dip low. Yeah. Not a very good opening range trade for crude oil. It's not going to work every day, though, but you have to take it every day, right? That's our mantra.
Well, I mean, it's always a low probability trade, and I thought it was pretty low probability, particularly today. We opened right in the middle of value, right in the middle of the range. No direction from VWAP, anything like that. So, but if you don't take it, you don't get it.
Exactly. Good follow through to the upside.
JD, if we can, I know we talked about, what we can do with these opening range trades. If you want to meet a little bit later, I have an idea where we have either an opening range trade or the opening range fade, where that fake out to the downside could actually be the buy opportunity to catch this move in the other direction. And we'll put some rules around that. But I have an idea for that.
Interesting. Yeah, I have some questions too. How do you fade it? Do you hold off? Do you wait for the second opportunity to get in? So say
good.
When you're
say we establish our opening range and we're trading towards the lower end. Instead of taking the short on the very first signal, do we wait for a second signal and then play the fade if we don't get the signal?
Once it takes out the high of the opening range.
So if we have my screens up real quick, what we're going to base this on, I'm going to do crude oil and gold.
Order filled.
So crude oil, for example, right? I attach VWAP to this all the time. If this VWAP is not a sharp angle, and it's a quick read because we don't get to see it like this, we see it like this, right? But if this VWAP is a flat angle, the minute we leave the range, if VWAP is still flat this way, then we don't take it. And once we close back above it, then we take the long.
Okay. Yeah,
Right?
I'd like to learn more about this.
In gold, we would have taken this because of that angle. You see how that VWAP angle is sharp to the downside? We're still only getting a 1 minute candle. This one we do take, and that's the one we took. That VWAP kind of pushed us lower, and that one's still holding. But in crude oil, because that stayed flat, this would be a fade instead of a continuation. And I think we're seeing equities pop right now.
Yeah, we talked about expanding the opening range to 2 minutes or 3 minutes or 5 minutes. If you guys want, I can go back and look at the performance of these opening ranges with bigger time frame opening bars. I've done that a few times, like in the equities, and in the equities, they're so streaky. It's going to work 8 out of 10 days, and then it's not going to work for another 20 days.
Right.
But different markets are a little bit different. Order filled.
Hey, JD, we just saw crude hit 83% long. It just took a drop down to 79. See if we can have that 80 play like you talk about.
That was the play for quite a bit. Anytime you saw the crude oil tilt pop above 80 just after the open, a reversal was imminent, right? And we're seeing that again today. So the pattern is still intact with that. Tilt has been a decent indicator of tops and bottoms in crude oil.
Is tweeting already.
Oh, here we go. Headline risk, folks. Headline risk is on.
China wants to make a deal badly. Says that we're waiting for China's call. I could just imagine seeing them all sitting around a phone waiting for it to ring.
He's going to call now.
He's
not going to pick it up. Who's going to pick it up?
Noonan.
Eddie, when he calls you, you pick it up and tell him I'm busy. Order filled.
White House, can you hold, please?
I can't wait till we get Jack in the press room at the White House. That will be the new golden age of Top Step TV.
There you go.
Jack Pelzer, political correspondent.
Top Step.
Well, if they're making a deal, I don't want to short this anymore.
Yeah, right. I'm going to switch back over to equities. Let's set up our Fast market friends for success. What do you think about an opening range trade in either the ES or the NQ? Let's switch over to a 1-minute chart in the Nasdaq. We're above range, above value from yesterday. Got an overnight VWAP in the NQ down at 17,855. And well above that, and we're seeing some decent buying coming in right now.
This is my baby right here.
Which one do you like?
Damn.
Jay, do you like Nasdaq? Do you like S&P?
I would go with the S&P.
Over. Yeah, I was just going to say let's switch back over to the S&P. All right, pulling up the 1-minute chart of the ES. Just because it's been a little more liquid than the Nasdaq.
Yep.
Yep.
A little more spry.
So got about 17 minutes until the opening bell in equities, 8:30 a.m. Central Time. I saw somebody asking in the chat, what's New York time versus Chicago time? It is a 1-hour difference. So
yes.
8:30 a.m. Central Time would be 9:30 a.m. Eastern Time. But the case for the opening range trade.
I mean, we're above value. Overnight inventory long. We get some good news. I mean, it could go right away.
It feels like it wants to go right now. Yesterday's high up at 52.86 half. Yesterday's high. 30-point moves are nothing in the S&P right now. Also, yesterday we had a 70-point ripper in just under 2 minutes in the ES. It was wild.
80 still holding in the crude, 80% long, 74% in the money. Money. Yeah. Gold, yes, gold. Tyrell.
Gold popped.
Gold.
Oh, your
39.
Your 49.88 weekly kickoff level was absolutely beyond decent yesterday.
Yeah, S&P is
Looking
really
at
just bounced off it a dozen times.
It did. It held. It was a perfect line in the sand going into the close.
44. Damn.
Moving it.
That was the one, man. That was the one.
Got our overnight high, which we just made, 52.57 half. Tapping on the ceiling of new highs again right now.
That was the one.
Squeezing some shorts and gold, maybe.
That was the
boys and girls, we are coming to the end of opening call.
Squeezy
wheezy.
Yes, Eddie, what's on the docket for the rest of the day? What do we have to look forward to here on Top Step TV?
We got some cool shit coming up here. Coming up here for fast markets. We've got another great all-star lineup this morning. Fast markets, Coach Dakota and Barron. Coach Dakota locked in 636 yesterday in his live funded account. And after a day like yesterday, that's a pretty penny. Barron recently quit his job to become a full-time trader. Even though he's coming off a losing day yesterday, nothing will stop Barron from jabbing his way back up. And taking a look at what else we've got here on the docket. 0-day Jay and Cove Trader going to meet up with Andre a little later on this afternoon. We got Coach Jack, his VIP update, and Coach Hoop with his VIP update. We got Elmir, number 112 on the big board. And end the day here, we got John London. Our buddy Johnny London going to end the day here with our hour. And that's what we got here. But I'm going to pass this back to you guys. Any last words before we take a break?
Headline risk is back on, folks. Well, it hasn't been off the last couple of days, but we've seen headlines piling in all morning.
Order fill.
So make sure you have
order fill
on the news as well as the charts, and have a great trading day. Coach Jay, Ogue, what do we got?
Trade well, manage your risk. Don't be, afraid to use a couple micros in this environment, because I think
order fill.
It's going to be a ton of opportunity, but that means a ton of opportunity to lose as well. So manage your risk.
Cool. Johnny Hobbs.
Hey, take a deep breath. Stay humble, grateful, creative, and centered. Pray for peace. Get yourself some more whiskey. I mean, coffee, and order filled the trading day.
Put some Jamesons in that coffee. All right, folks, we're going to take a little break, and we'll be right back.
Stay tuned. We'll be right back.
We promise.
$10 which is great.
Why TopStep? Because traders shouldn't have to risk everything to participate in the markets. And since 2012, we've provided capital to over 10,000 futures traders just like you. From the pits in Chicago to screens in over 143 countries, we've been motivated by one simple idea. We don't care who you are or where you learn to trade. If you pass TopStep's trading evaluation, you'll be invited to trade with our capital in a fully funded account. As a TopStep funded trader, you keep 90% of profits and we take the losses. We also offer educational resources for all levels, live classes, and free group coaching from a team with over a century of professional trading experience. We're invested in your success. So what are you waiting for? Ditch the brokerage account,
order filled,
start learning by doing, and become a TopStep funded trader today.
How do you manage your emotions in trading? Are you taking anything from the ski, like professionalizing your mindset to get that in the right spot that you've done over the last 20 years?
Yeah.
To do anything and bring it over to the trading world?
Yeah, I mean...
You meditate, right?
Yeah, I'm meditating, and exactly that.
Order filled.
You're not going to have a great day every day in trading. Like you said, it's a love-hate business, and it's the same thing with skiing. It's a love-hate business. Not every day is going to be the most beautiful, sunny, slushy day.
Yeah.
There's a lot of days that are super icy, and you don't want to put your body on the line.
Yeah.
And
conditions of the day change, all that kind of stuff.
Exactly.
Yeah, you got to adapt. Yeah.
Exactly.
In front of you is the daily bar charts for the ES. When you look from left to right for multiple days, what is important in there is that there's no indication of what I call adults in the room. When I use that statement, that means that I don't see any indication of any dominance by large institutional traders or those investment managers that hold for extended periods of time.
And it even, quarter bid, half bid, the orders bid, even bid. Now I'm a seller, quarter, half, the orders, and even.
And let's see what's going on with the Goog. Goog is telling us what? Let's go to the hourly chart here. Where are we opening? Up here. Maybe able to manage risk out of this over Friday's high as well as Thursday's low and this previous low back here at 151.20. So you got a little bit of a helper level that could come into play at 151.20. If you get opening consolidation that brigade bolts into the gap range overhead, that could be an interesting trade. That's 152.80, 154.65 is the closure if we can get consolidation up here over the helper. If we fail the helper, then that's where I would just say, okay, previous Friday lows, midpoint of the consolidation from yesterday, 146.75, probably the target. Do we have big overhead supply on the daily that we should care about? Yes. Where is it, though? It's way up here, closer to 161.50. A little bit further out. Let's go to the metaverse, 9:22 on the clock. Not bad. What do we see out of the metaverse? some pretty clean levels down here in terms of this consolidation. This morning we're opening on a subtle gap up near these highs. So you're looking for a couple of places to act as support. Either the Thursday low, which was the top of the gap, of course. And then, so that's 530.15. Either you hold this zone and rally back up to test Thursday's high. And then this gap overhead is honestly where the better long trades, in my view, are going to start taking place because it's a bit more of an expansive range. And we could probably manage risk a little bit better off of the low of that. Something along these lines becomes interesting. Right, so 552.50, 574. I like that to the upside. Where would the short be? I don't see the short on this chart in particular unless it's either a much higher short up around the daily 200 for a rejection here, like gap fill reversal type short up here for something like looks like this. Or if we're back down, let's say that this happens like this, we're consolidating into a bear flag down here, that could get interesting for the downside. So we'll watch that. Tesla, 923. Tesla consolidation after the gap closed yesterday underneath Friday's session. This morning we're opening here. Tesla gives me a little bit of a heartbreak because the structure, it would have just been so much better to preserve the balance range over the highs. And opening here still gives the opportunity for a lower high to preserve at 250.50. So that is... I'm not thrilled about that. I would like to take Tesla longs back over 250.50, show me the clearance, get back into this upper range, and then maybe this turns into like a daily or weekly double bottom, right? Something along these lines. And then there's a stronger upside impulse up and over the neckline, which would be way higher around that daily 200. Let's call it 286, right? So that would be that. INF, the based homie. When did you sneak in? I hope you're vacation. Are you still on vacation? I think you are. Hopefully you are doing well and enjoying. All right, JP Morgan, earnings on Friday. Don't forget it. Don't forget it. It's not that I don't think I'm overly bullish. We know that the lower highs can persist, but it seems as though the capitulation low is in, which is why I am taking a little bit more of the stance that the counter trend can play out today. So that's the logic behind that one. Presidente. El Presidente. I remember going to the Dominican once. And I think the beer that they have down there is called El Presidente. You ask for a Presidente. El Presidente, por favor. So we know where the range is. It looks like we're opening up here closer to the election gap. Same concepts, rinse and repeat. Pull back higher low longs over the wicks at 217.75. And then the gap close overhead is the full target up at 227.25. So about, call it 10 points. We'll watch out for. Anything that falls into this area, probably just holding our breath until earnings. And personally, I'm not so interested in trading JP Morgan right now. It's just continued to act as a bellwether for the S&P. It's a good leveling factor outside of tech to have for your S&P. So that's that. It's good to keep track of. Let's take a look over here. And let's take a peek at Netflix to finish it up. 4:19 on the clock. It'll give us enough time to round up the ES one last time. Netflix, 897, 900, this area in here. Opening on a slight move above that. The structure out of Netflix... yeah, I mean, maybe. It has to align with the broad market. If it does, then maybe there's a long off of that on a pullback that supports. I would say that this is a lower tier, lower probability watch for me this morning. If anything, reason being is that just this, of course, and the weekly pattern is much weaker out of this on the reversal here, right? So rejections of this neckline, if this fades back off again, starts to get a little aggressive there. That's that. All right, let's jump on over to the ES futures one last time. Let's see what we can see, and then we'll send you on your way for another lovely day of trading. What do we have out of the ES? Not the Rusty Rut, but the ES. New overnight high. Absolutely. Absolutely. We're close to the previous day's high. We're close to a structural level as well. So quick draw McGraw out there. You guys remember we were talking about this pullback to here. Seemed pretty solid for this path. If we now get a look above and fail on the previous day's high, I'd be willing to take the short here to get to the pullback low in the first place. Because, you know, now the risk reward is much cleaner happening like this, right? So watching out for that previous day's high. If we are accepting outside of the previous day's range, once again, the gap close overhead is what we're thinking about into 54.25. 54.25 up here, right? So acceptance over prior day's high, gap close becomes the target, then GFR, gap fill reversal. Okay, that would be back down to the opening print. If we get back down into the prior day's range, that's a short here, reevaluating here for this, and that would be how a structural low starts to build. We have lows. This could, in theory, turn into a 1 hour higher low. If this preserves like this today, that could be an hourly higher low. We shall see. We shall see. Rob Pope says, what is that on the SPY? The gap overhead is 526. 526 to 536.50 right here. So that would be look above and fail, pulls back to here like that, or look above and accept, close the gap 536.50, gap fill reversal. Something that looks like this is an hourly higher low, right? Same thing. Okay, that's what I've got for you on today's session of the pre-market prep. Big shout out to all the usual suspects. Do me a favor, hit the thumbs up button on your way out. Big shout out to Rob Pope, the one and only Jim Robitaille. We have Tim McDonald, Sarah A., Thomas Teal, Fish Zom, Desert Dean, Kahia is here, Michael A. Sorry, Micah. Jeez, Matt, get it together. We've got Tesla and Tech, Tommy Twista, Desert Dean, did we get you? We've got Paul B, Maria, Effin and Jeffin, all the usual suspects. You guys know who you are. It's a pleasure to have you up here in the office day in and day out. Hopefully you guys are navigating this very volatile market with some semblance of some, I don't know, helpful guidance, I would hope. And we'll all get through it, right? We'll all get through it. So have yourself a green trading session, and I will see you, as always, in the next one.
House, of course, upper right-hand corner in front of that beautiful mountain. Jack as well. We got 30 seconds into this open. Dakota, I don't see a bear or a bull behind you. I just see the charts. What are your thoughts coming into the open?
I mean, bear market's canceled, man. Bear market's canceled. We're up 10% from the lows, and we just talked. I was talking in the green screen in the green room, and that intraday move, over 11% in the Nasdaq. Like, what do we do? What do we do here? And every single time I look at this chart, we're either up or down 50 points. So patience. Let's see.